So what would drive a property market to go up or down for that matter? Without question, there are 6 market drivers when it comes to real estate capital growth. Broad-based economics tells us if the population is growing, more people are coming into an area, you generally see a correlation in property values lifting. If people are leaving, well, obviously, less demand, and that creates a problem. When it comes to real estate growth, the number one driver is supply versus demand. If you can find areas that are significantly undersupplied or the absorption levels are really, really high, you're generally getting more demand in those areas and therefore usually upward trajectory when it comes to capital growth. Other drivers when it comes to real estate is infrastructure. Infrastructure is a huge element when it comes to where people are going to live. Today, people want to live close to trains, close to transport, and those nodes can be very, very helpful when it comes to property investment. In fact, getting into a cheeky little hotspot before a train line comes to the area or before a train station opens, it's a fantastic way to make sure that you're getting future demand for your property investment. Beyond that, well, economics is an important one. Where are people going to work? What are they going to do? How are they going to live? How are they going to make an income? What are the incomes of tomorrow? Well, I can tell you in real estate, we are looking at incomes closer than ever before. The idea that our economy is changing, it's growing, it's moving, it's shifting is upon us, and the knowledge worker economy has begun. And I can tell you, where are those people going to live? What are they going to do? That's where we want to invest. Are they going to be in all cities or just some cities? And people today, a lot of people are smart workers. They're working from home. Technology is allowing us to do that. So where are the smart workers living tomorrow? That is the big question. And of course, when we can understand that, we can find capital growth drivers in the economy. One of the other drivers is, of course, rental returns, yields. There's an old saying in real estate, capital growth follows rental returns. We're returning to a point in our cycle across Australia where rental growth is due to occur. Supply levels are falling off a cliff at the moment in Australia. Production is slowing down of new properties and rental returns are certainly increasing. The last shift and the last driver is demographics. Demographics are a big play when it comes to choosing capital growth. Is it a family-oriented suburb? Is it a knowledge worker-orientated area? What demographic is going to live in that area? Are they a growing demographic or are they in decline? If they're in decline, well, potentially that area may not be the right suburb to invest in. Demographics is a number one concept when it comes to understanding what consumers will do. If you understand what demographics will live where, you can virtually bank on getting some very good rents and understanding what next when it comes to property investment. Drivers, there's 6 of them. When you learn them, you can find some capital growth in the marketplace. And I can tell you there's 3 forms of capital growth: property growth, area growth, and market growth. If you can work out those 3, you can certainly make capital growth year on year in real estate, which is what we want.